right, thank you all for tuning in to WGHC 98.3 FM, your voice and music, your station. My name is Jeff Badu, and I'm a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. And what we do is we provide a suite of financial services, including tax preparation, financial coaching, property tax appeals, life insurance consulting, and services of that nature. Today, I'll keep it pretty brief and just talk about, in my opinion, the top 5 investments in the world, basically. So essentially, we'll be talking about the top 5 investments that you can make in general. So that's something that I would strongly, consider paying attention to, taking notes, basically digesting the information to the best of your ability. So with that being said, let's start it off with our market report. And I'm sorry, but welcome to the show Money Talks, where all we talk is money. And essentially, the way we kick it off is we start off with the market report, and then we get right into the topic of the day, which today it's essentially on the top 5 investments that I believe you can make in the world. So let's start off with the market report, which is as of October 2nd, 2020. Stocks began last week on a high note, with bank and energy stocks leading the way. European shares vaulted to heights not seen in more than 3 months. So basically, European shares are going up, which is good news for that country. And news from a large pharmaceutical company that its COVID-19 vaccine was yielding very favorable results helped drive cyclical stocks higher, while industrials, airlines, and energy shares also rallied. By the end of trading last Monday, the Russell 2000 climbed 2.4%, the Global Dow jumped 2.0%, and then the NASDAQ gained 1.9%. On top of that, the S&P 500 advanced 1.6%, and last but not least, the Dow actually gained 1.5%. Treasury yields and crude oil prices essentially went up while the dollar dipped. So that's basically what happened last Monday, right? Stocks began on a high note. Everything was going higher. So that's what happened on Monday. Now let's see what happened on Tuesday. Equities reversed course last Tuesday, giving back most of the gains garnered the day before. So basically, it went down. Each of the benchmark indexes essentially lost value, which was led by the Global Dow at negative 0.6%, followed by the Dow and the S&P 500, each of which lost 0.5%. The Russell 2000 dropped 0.4% and the NASDAQ fell 0.3%. NASDAQ is mainly composed of technology stocks. So the Apples, the Microsofts, the Googles, the Amazons of the world, that's where they belong essentially. Investors may have been waiting for the first presidential debate as trading was light. Energy, airlines, and bank stocks led the decline, while communications and technology stocks had held their own. Crude oil, treasury yields, and dollar fell. So following last Tuesday's presidential debate and renewed hopes of a fiscal stimulus, so they're still debating on whether or not they're passing this stimulus package. Stocks surged by the close of trading last Wednesday. The Dow jumped 1.2%, the S&P 500 gained 1.8%, the NASDAQ climbed 0.7%, Global Dow advanced 0.3%, and the Russell 2000 added 0.2%. Crude oil prices and treasury yields rose while the dollar sank. So it was a pretty good day on Wednesday because there were hopes that the new stimulus package would at least be getting closer to being passed. To this day, however, there's still not a stimulus package that has been passed. So that's something to keep in mind there. Last Thursday saw a dip in the number of jobless claims and ongoing negotiations between Congress and the White House toward more virus stimulus. Investors, buoyed by the favorable developments, turned to stocks. Tech stocks pushed the NASDAQ ahead 1.4%, while the S&P 500 0.5%, the Dow 0.1%, and then ultimately, basically the big winner last Thursday, however, was the Russell 2000, which surged 1.6%. Crude oil prices, treasury yields, and a dollar each fell by the end of trading. Now let's see what happened Friday. Friday was a very interesting day. Friday was a very, very memorable, historic, a day that you never thought would happen. But let's see what happened last Friday. Stocks slumped last Friday, ironically, as news that President Trump tested positive for COVID-19 would seem to outweigh passage of a $2.2 trillion stimulus package in the House. So all of a sudden, they got their senses together somehow, some way, and they came up with this $2.2 trillion stimulus package in the House, and then all of a sudden, President Trump catches COVID-19. To this day, I thought he was a man made of steel, and he could never catch COVID-19. But apparently, COVID-19 could get to anybody. So please take it seriously. But basically, weakness in mega caps and tech shares dragged the major indexes lower. By the end of trading last Friday, the NASDAQ fell 2.2%, followed by the S&P 500 at 1%, the Dow 0.5%, and the global Dow 0.1%. The Russell 2000 rebounded from a poor start to post a positive gain of 0.5%. The dollar was little changed. Crude oil fell for the second consecutive day, and treasury yields rose as bond prices fell. So despite the drop last Friday, stocks managed to gain over the prior week. The Russell 2000 climbed 4.4%, followed by the Dow, which gained 1.9%. S&P 500 climbed 1.5%, and then followed by the NASDAQ at 1.5%, and then the global Dow at 1.4%. Year to date, the NASDAQ, composed mainly of technology stocks, is 23.4% over last year's pace, which is huge. Followed by the S&P 500 at 3.6%, the only two benchmark indexes ahead of their 2019 year-end closing marks. Price of crude oil went down from $40.12 per barrel to $37 per barrel. Price of COMEX gold went up $18.66.10 to $19.05.40. So far, the Dow Jones is down 3% this year. NASDAQ is up 23.43%. That is humongous. Big ups to the tech stocks in the world. I'm sorry, in the U.S., I should say. S&P 500 rose 3.64%. Russell 2000 is down negative 7.74%. The global Dow is down 9.05%. So that means that the global markets, the global stock market overall outside of the U.S. is essentially down for the year. Federal funds target rate is at a mere 0%, and the 10-year treasuries are at 0.69%. What to look ahead to this week? This week is a slow one for market-moving economic information. The Institute for Supply Management report on the services sector for September is out this week. Services grew in August for the third consecutive month, and September is expected to continue that trend. So more and more people are taking advantage of services, which that's the way it should be. Make sure you go see your accountant. Make sure you go see your financial advisor. Make sure you go see somebody who's going to help you in this tough time that we're going through, known as COVID-19. Also out this week is the latest report on international trade deficit for August. The July trade deficit was $63.6 billion, an increase of $10.1 billion over the June deficit. So there you have it. That's the market. It's one of those where I feel like everybody listening today should be involved in the market. And we'll be talking about it a little bit today in one of our top 5 investments. Hint, hint. Everybody should be involved in the market in some way, shape, or form. Whether you're young, whether you're old, whether you're in between, whether you're scared, whether you like to take risk, I think you should be involved in the market, because by not being involved, you're actually losing because you're not getting into some of these gains that we're seeing here. If your money is sitting in the bank earning not negative, but 0.000001%, it's not doing you any good, any justice. Now, you should have at least 3 to 6 months worth of liquid cash or liquid assets in the bank at all times to keep you liquid and to keep your reserves up, because you never know what can happen. But I'm talking about the money that's outside of the 3 to 6 months, maybe excess funds. You definitely need to find a way to invest it. You need to find a way to do something with the money and ultimately make your money grow. So let's get into the topic for today. Top 5 investments that you should be making. And I would challenge you. So anytime we get on this segment, this radio, here's the way to make the most out of it. For one, please pay close attention to the things that are said on this show. 2, please make sure you're taking notes. Like, it is utmost critical. At a minimum, get down to bullet points of the main things we talked about. And if you can elaborate on the notes, then go ahead and do so. It is imperative. This is one way that I learn, is by taking notes. That's actually the only way I can learn, because then after the fact, I can go back in time and basically review my notes and see what I learned, and then maybe review it a week or two after that. Without taking notes, this information doesn't really do a whole lot. You can try to remember as much as you want, but in this world that we live in, I mean, we're so bombarded with information, it's crazy. So you have to make sure you're taking notes, especially when you're listening to financial information, something that can actually put money in your pocket. So it is very important. And then last but not least, if you have any questions, please feel free to chime in. We're live on Facebook and Instagram today. You can find me. Name is Jeff Badu, JEFFBADU. You can ask any questions you want, any comments, anything you're confused about. This is recorded, so it is posted on my Facebook page in case you miss anything or you weren't able to catch the full thing. And it's also posted on my Instagram IGTV page. It will later be posted on my YouTube channel, which also goes on my website, jeffbadu.com. So let's talk about it. Top 5 investments in the world. Where should you invest your money? First place you need to invest is yourself. Believe it or not, you should be investing in yourself more than anything else. Before you throw money into a stock fund, before you throw money into a retirement account, before you throw money into real estate, please invest in yourself. I think sometimes we forget that we're even existing on this planet. We work so hard, we do so many things, but we forget about the most important person that makes it all happen. At the end of the day, it is ourselves. So please invest in yourself, invest in your education. Listening to segments like this, going on the website, jeffbadu.com, reading the books, attending a course, a seminar, something to advance your education. In order to enhance your skill set or enhance your ability in anything in life, one must be educated. This is the only way I became financially literate, is because I went out and actually took it upon myself to educate myself on finances. Believe it or not, this did not start until the year 2015 after I graduated college. It's crazy. They didn't teach me about money in college. They did teach me accounting and debits and credits and how to balance a company set of books. But I said, wait a minute, what about my own books? How do I balance that? They never taught me that part. So I had to take it upon myself to learn this stuff. I went on Investopedia, which is basically the Google of financial resources. Investopedia is a great site, looking up stocks, looking up bonds, looking up real estate, how to invest in real estate, what stocks to invest in. Now, I will put a disclaimer out. I was an accounting major in college, so I did actually take some accounting and finance courses, which allowed me to gain some insight on stocks. But at the same time, I know people very well who've not learned anything about stocks in the past and are able to learn it now, watching videos, going through simulations, tutorials, and getting a mentor too to help you out in the process. A mentor is somebody who helps you get there 10 times faster. Trust me, without mentors, I would be 20 years behind than I am right now. In other words, I'm 20 years ahead of my time. I'm 28 currently. In reality, I'm 48. Right? So that's what mentors have done for me. They've allowed me to build to the point where I'm doing way more now than somebody who's 48 years old. Literally, somebody who's 20 years ahead of me, or 20 years older, I shouldn't say ahead, 20 years older than me, is actually on the same level or below somebody who's 28 years old, who basically acquired mentors, trusted the process, got patient, established or formulated a team of dedicated and hungry individuals to go out and make sure we get things done. So overall, you need to invest in your education. Without investing in your education, you can't really go anywhere. So before we talk about real estate, before we talk about stocks, before we talk about IRAs, life insurance, cryptocurrency and bonds and everything like that, we need to invest in the most important asset that we have, which is ourselves. Invest in your mind. Make sure you're being fit, working out. You're not going through health issues. You're taking care of yourself, and really just living your best life possible. I mean, when I'm talking about it in this sense, investments, I'm more so talking about your education, specifically your financial education. And for me, there's tons of ways that I invest in my education. For one, I read about 30 books. I try to read about 30 books every year. And by reading, I mean listening to audiobooks via sites such as Audible. So I don't physically read books because my attention span is a bit lower when I'm reading. But when I'm listening, though, my attention span is extremely high. So I'm a better listener than I'm a reader. As such, I listen to audiobooks. That's how I get the information. So for me, oftentimes you'll see me have headphones in. That means I'm usually listening to some sort of content. And usually I do it during my quote-unquote downtime, when I'm eating, when I'm getting ready in the morning, getting ready at night to go to bed. Basically, during times where you're not really quote-unquote productive, you're just doing something that, you're not doing something that requires full focus and attention, such as brushing your teeth. Brushing your teeth doesn't really require full focus and attention. So you can multitask. But if I'm doing a client's tax return, then I can't really listen to an audiobook at the same time. That requires my full attention. So that's one way I invest in my education. Two is I pay a lot of money for coaching and training and mentorship. Pay lots and lots of money. Starting out, you don't necessarily have to, but at a certain point, you will have to pay somebody to make you more money. Makes sense, right? You're putting money towards something to make you more money. Some people are like, they just don't understand the concept for some reason. Like, why should I pay somebody money to make me more money? I mean, just think about it. So mentorship. I have 2 mentors. One who gives me advice on general business concepts. We call it the 12 practices of business and life as well. And then 2 is my accounting coach, who gives me more specific accounting, financial services related advice. We meet at least 3 times every week, and I get coached and trained on topics. There's not a single successful person on this world who made it without a mentor or somebody who they looked up to. It's impossible. It's completely impossible. So you need somebody you're looking up to. You need somebody who's going to coach you. Somebody who's been there, done that 1,000 times and back. Who's done it, who's basically where you want to be, essentially. So invest in yourself, your education. It is very, 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 very important. Last but not least, I watch a lot of videos. Lots and lots of videos from people such as Grant Cardone, Tony Robbins, Robert Kiyosaki, Bill Gates, Jeff Bezos, Mark Cuban. All the billionaires and millionaires out there, I basically listen to all of them. Tai Lopez. As a matter of fact, Tai Lopez was the first big figure person I was introduced to as far as somebody who I followed and listened to their content. I mean, it was powerful. How to change your mind, how to think more abundantly, just how to advance your mind. I think oftentimes we're so limited in our beliefs that we think that we can only achieve X amount, when in reality we can achieve much more if we just put our minds to it. So these people, when you're listening to these people, they give you the inspiration to go further. And I hope I'm giving you the same level of inspiration to go further, because we can all do more, be more, and live more in life. We just have to go out and get it and find ways to do it. For me, I can literally be where I am 5 years ago today, if I chose to, by not growing, by not acquiring mentors, by not doing the things that I'm doing now. For me, I'm growing every single day. Every single day. I'm advancing my mind. Today, I kid you not, I listened to 2 hours of real estate education. 2 hours of real estate education. I mean, that's just me, though. I wanted to advance my mindset. You're talking about somebody who's running 12 businesses simultaneously. Of course, with the help of team members. But still finds the time that we all don't seem to have to watch 2 hours, listen to 2 hours of real estate education. And on top of that, I was listening to an audiobook. I believe it's Rise and Grind by Damon John. And listened to about 30 minutes of that when I was eating lunch today. So you ultimately have to advance your mind every single day. It doesn't always have to be on finance and all that, but it needs to be something that's engaging your mind. It's leadership, it's development, it's something that's taking you further. Not these soap operas and celebrities, and they won't do you any good, trust me. It's good for entertainment purposes. Maybe you watch it once in a while, but to do it every single day for an hour, 2 hours, 3 hours, it's doing you no good, trust me. Even if you're in the entertainment industry, it's still doing you no good. However, and basically feeding your mind with content that essentially advances you in life, to me, that's what's going to help you more than watching a bunch of celebrities fight each other. So that's my take on that. Invest in yourself, invest in your education. Spent a lot of time on that topic because I feel it is utmost critical and important to talk about. Number 2, investment on the planet, real estate. You've got to own it. If you don't own the land that you're standing or walking on, that's a problem because somebody else controls it. So I would say, for me, real estate has always been a bread and butter. How I got started in real estate, well, my family's been involved in it in over 30 years. My dad was the one who pioneered the real estate aspiration, or he was the one that bought the real estate, and my mom followed along. And then as a kid, I mean, people say this all the time. They say, oh, yeah, you're not really influenced, or you don't have to do certain things that your parents did, or you're not necessarily influenced by the people that you grew up with. I mean, that's a complete myth. You're, of course, influenced by the people you grew up with. So if your dad was a farmer, if your dad was a banker, if your dad was something, you're going to tend to at least not even necessarily follow his footsteps, but you're at least going to mimic, or you're at least going to try and do what it is they're doing, or listen, or just shadow, pay attention, do something that they're doing. That's why oftentimes you find that unfortunately, the father passed away, but he passed the business down to the kid because the kid learned all about the business. They gained a profound interest, a profound skill set. And so for me, that was it with real estate. I mean, I got exposed to it very, very young, very early, to the point where I tell people, if you were to literally slip my wrist, you would see real estate bleeding out of me. Just because of the fact that I love real estate. I live and breathe real estate. Real estate is a great investment. It's something that you can literally own for the rest of your life. Unlike some of these other investments, it's something that you can actually touch, hold, feel, grab. You can control it. Real estate, one of the biggest reasons why we invest in real estate is because you can control the asset. And when I say real estate, I'm mainly talking about buy and hold rental property real estate, where you buy a property and you rent it out to a tenant for income. In exchange for money, you're giving up the rights to basically live in a property. And you collect income every single month, hopefully. You're screening your tenants. Hopefully, you are making the best decisions when it comes to renting to the right people. So real estate is my number 2 investment in the world. Love it, love it, love it. If you need more information on real estate, check out my other segments. Also on the website, jeffbadu.com. There's tons and tons of resources, information available on the topic of real estate. Number 3, retirement accounts /stocks/ETFs. Why are these all put in together? Because retirement account is the vehicle that you use to invest into the stocks and ETFs. Believe it or not, a lot of people are investing the incorrect way when it comes to the stock market. you have this IRA account, individual retirement account, that you can pump up to $6,000 a year into it, but a lot of people don't take advantage of it. And specifically, we're talking about the Roth IRA. Some people just dump money in the stock market, which is cool to start with. Maybe you just didn't know. But at the same time, you pump money into your retirement account first using sites like TD Ameritrade, Robinhood. All these different sites, basically, where you can create a retirement account. It's very easy. It takes 5 to 10 minutes to start it, or if it needs to take you longer, then maybe 30 minutes. If you're having trouble, get on the phone with TD Ameritrade and say, hey, I'm having trouble with this question. Can you help me answer it? Absolutely, they will help you with that because they know it's a win-win game for them. So basically, the way to do it is you're investing through your retirement account, such as an IRA, individual retirement account, Roth IRA to be specific. I appreciate the shout out to Walter. And basically, you take the $6,000 or so, or however much you want to invest. Maybe it's $150 a month, $200 a month. Basically, the concept here is don't just dump money into the stock market. Dump money first into your IRA account after you've invested in your education. Of course, you have to know what you're doing. And then use the money that's in the retirement account to invest into the stock market. And if you're a beginner or if you're somebody who's risk averse, wants less risk, doesn't want a whole lot of exposure, and you want a well-diversified portfolio of stocks, good stocks, then invest in an S&P 500 index fund, such as an ETF known as SPY, Sector Spider ETF, basically. So SPY is an index that is composed of the top 500 stocks in the U.S. Is this stock fund really going to fail in the next 5-10 years? Think about it. It's the top 500 companies in the U.S. What happened if the top 500 companies in the U.S. even somewhat collapse? The world would literally collapse completely, shut down. Boom. If Amazon were to collapse, the world would shut down today. If Apple were to collapse, the world would collapse today. So these are trusted and vetted companies. S&P 500. S&P 500 stands for Standard & Poor's and essentially makes up the top 500 companies in the U.S., such as Apple, Microsoft, Google, Amazon, Johnson & Johnson, AT&T, the top 500 companies in the U.S. There's no way you can lose money in this fund. Trust me. And to give you more confidence, I'm personally invested into this fund. So ultimately, an ETF, exchange traded fund, aka an index fund, such as SPY, that's the ticker symbol, by the way. That's a great fund to be in. All you got to do, open up your Roth IRA account, put up to $6,000 in there, and invest it into perhaps SPY. Every single client that I've recommended this fund to, they've made money. I have a client who's doubled their money. I have a client who's made 30% return in about 2 years. So ultimately, I believe that retirement accounts are a great way to build wealth. It's also asset protected. Just ask O.J. Simpson. Basically, when you put money into a retirement account, nobody can sue it. Nobody can touch it. Nobody can grab it. When you have a stock fund or a savings account, somebody can sue. Somebody can grab it. So that's why I beef it up with retirement accounts, because of the ability to have tax benefits with the Roth IRA, the tax-free growth. You don't have to pay taxes when you're making the money. And then also, it's protected. It's asset protected. And then I would throw in a bonus. It's a less likelihood that you'll touch the money, because if you touch it, there's penalties and everything associated with it, unless you do it in a smart, strategic way. But overall, it's very, very beneficial to take advantage of retirement accounts that you use to invest into stocks and then ETFs. Next is, you might be surprised, but life insurance is an awesome investment, especially permanent life insurance. My personal favorite one, it tends to be the Index Universal Life Insurance Policy, where it's you basically have a policy. Let's say you're putting in $100 per month. Well, perhaps $20 goes towards your life insurance, so that's to actually protect you. And then $80 goes towards an investment account. With this investment account, you ultimately get to you basically get to invest into a fund like the S&P 500. And what happens is the money grows over time. Every month you put in $80 into the fund. $80, $80, $80. Well, money builds over time. $5 invested a day for the next 40 years will yield you $700,000 into your bank account. That's the power of compounding. Compound interest, the velocity of money, or as Albert Einstein called it, the most powerful force in the universe. It's also known as the time value of money. So you invested. This money is being invested into a fund. It grows over time, right? And that, for one, it's indexed. Index meaning that it's benchmarked to the market. So in a year where we're doing maybe 15%, you might make 13% on your policy, because there's a cap on some policies of 13%. I've seen a cap as high as 15%. And then there's a floor. A floor is the minimum amount of money you can make in the policy. So with the floor, it can be 0%. Meaning in a year like 2008, when we were down like negative 20+%, you actually don't lose anything because you're protected. Your investment is protected. In some policies, I see a 1% floor, which is huge. Even in a bad year, you still make money. Now, we're not talking about inflation and all of that because, hey, if the market lost money, that means everybody lost money. But you, in a way, somehow, some way, gain money. So inflation is not really something to think about if people are losing money. It is something to think about in general and when you're making your calculations. However, when a market is tanking and everybody's losing and everybody's pulling their hair out, inflation is probably not the first thing on your mind. You're probably thinking about keeping your money, safekeeping your money. And for you to be able to make 1% on your policy, that's huge. So it's basically always indexed to the market, and it has a ceiling and a floor, and the money grows over time. You can take it out for your kids' education. You can take it out for retirement, vacation, whatever you want to do. And here's the beauty of it. When you take out money from a life insurance policy, in a smart way, of course, you don't have to pay any taxes on it. It is tax-free withdrawals because you take it out in the form of a loan. One of the things I learned in the U.S., and I thought somebody was crazy when they told me this, is a wise man once told me, start your own bank. It doesn't have to be a big brick and mortar that has J.P. Morgan Chase next to it or in the front of it, but it can have your name on it. It can literally have your name. It can be Jeff Badu, the Jeff Badu Life Insurance Trust, whatever it is. It is your bank. You can go in there at any time, take out money. You need money for a real estate project, go ahead and take it out. You need money to fund your kids' education, go ahead and take it out. You need money for a renovation, go ahead and take it out. So that's the beauty of life insurance, is that you ultimately, you ultimately get to invest the money into the policy while protecting your life. You still have your death benefit, which protects your life. We do have a question here. Question is the traditional IRA beneficial as well? I'm not a fan of the traditional IRA because of three things. One, you have to pay taxes at a later time when you withdraw the money on both your principal and your gains at the full income tax rate. You can literally be investing money and the money grows over time, and when you sell the stock, you can get what's called long-term capital gains tax rates between 0 to 20%. But instead, if it's in a retirement account like a traditional IRA, where you're paying taxes at your full income tax rate, which is crazy. So basically, you have to pay taxes at a later time. Let me give you a little bit of history about taxes. The highest tax rate in the U.S. right now is 37%. The average tax rate in the U.S. is 60% across over time. 60%. The highest tax rate in U.S. history was 94% back in 1944 when they were fighting the war. Are tax rates going to get higher? Yes, they are. So why not pay the taxes now and not have to deal with it later? That's why I don't like the traditional IRA or traditional pre-tax account that doesn't give me after-tax benefits as well, like the HSA or health savings account. So that's one reason you have to pay taxes later. So I don't like the traditional IRA. Second reason is you're faced with required minimum distributions once you hit age 72 and a half. It used to be age 70.5, but now it's 72.5. And then when your beneficiaries get the money, they also have to deal with that stuff. No such thing really when it comes to the Roth. I mean, there's no real tax implications of a Roth IRA because the taxes were already paid up front when the money was put into it. So those are really the two reasons why I don't like traditional or pre-tax accounts, because of the fact that I don't get the comfort of knowing that I don't have to pay taxes later. Because what if taxes are 94% and you've been working so hard the next 40, 50 years just for some government to take it all away from you because they need money for a war? I mean, to protect you, I guess. But at the same time, I would much rather put money into better hands, in my opinion. So that's why I don't like the traditional account. But last but not least on the list is cryptocurrency. Why do I say this? It is very risky, but man, it has a strong, bright future ahead of it. I think cryptocurrency is the future. You know, when you see something, when you see a trend, when you see people using computers, when you see people using Zoom, when you see people no longer going to offices, when you see cars that can charge up at your house, you need to start following that trend. You don't go against the trend, you go towards the trend. So cryptocurrency, it is a great time to get in. It is still very early in the game, because with cryptocurrency, that's said to be the future of money. Fiat currency, aka the dollars you put in your wallet, that's going to be a thing of the past. Cryptocurrency, which is virtual money basically, that's the future. Invest in the future. So for me, I'm all in with cryptocurrency. Even though we took a hit, between 2016 and 2017 was a very weird year where basically cryptocurrency just shot up through the roof and then came down, and now it's basically going back up. But cryptocurrency is the future. If you don't know what cryptocurrency is, then please do not invest in it now. Make sure you do your research. Go out and check out the article that I put on my website, jeffbadu.com. It explains cryptocurrency in full, and we also have some radio segments on YouTube that we've done. But I think it's the future. Anything that's the future, I'm all in. We all know technology is the thing. Technology is killing the market right now. 23.43%. The NASDAQ is ahead this year. So for me, I'm all in cryptocurrency. I think everybody should be in it right now. It doesn't matter how high it is right now or how low it is. I think you should be in cryptocurrency as we speak. Maybe even, I mean, it's crazy. Some of the stats, $100 invested in crypto back in 2008 would have made you millions and millions of dollars in today. We're talking just $100. Millions of dollars in your pocket had you invested. 100 measly dollars. So for me, anytime somebody tells me, hey, I have this investment, you know, I'm like, hey, let me put in the money there, like, and it's somebody you trust, somebody you honor, somebody who doesn't send you off, somebody who has your genuine best interest in mind. I'm like, you know, here's the $100 that I'm going to put into the fund, and tell me all about it now. Worst case, if it turns out to be that something that's like, you know, it's not right for me, I take my money back out. And it's like, holy cow, I need to put more money into it. Put more money into it. I have a client who made $60 million off cryptocurrency in 1 year, by the way. And I had trouble getting a hold of that client 1 year when I was filing his tax return. I mean, this man took so many vacations. It was crazy. Now, his value has since gone down a little bit, but he's still worth millions of dollars. He's a multi-millionaire off cryptocurrency because he believed in the future. So it's a really important point. Please trust the future, trust your instinct. The future is it. Tesla, and I mean, you gotta get into these companies. You gotta get into these funds because that's the future. That's where the real money is going to be in the future. So with that being said, those are the top 5 investments. You got yourself and your education. That's number 1. Number 2 is real estate. Number 3 is retirement accounts / stocks / ETFs, basically paper investing or you know, paper stocks. And then number 4 is you essentially have, let me just go back to the list. Number 4, you have life insurance. Can't forget about that. And then number 5 is cryptocurrency. So those are my top 5. I would strongly recommend that you at least look into these 5, at least research them, and then when the time is right, pull the trigger and invest in them. If you need any information, please reach out to me. Website is jeffbadu.com, jeffbadu.com. You can also reach out to me via email at jeffbadu@gmail.com. And also, you can reach me by phone, 773-679-7198. Once again, 773-679-7198. And, with that being said, thank you all for tuning in to WGHC 98.3 FM, your voice, your music, your station. My name is Jeff Badu, and I look forward to continuously delivering you all some content. Thank you.